All right, I have to admit I'm an entrepreneur, so normally I can just talk about an heroic venture of 4 young guys starting here at RSM, conquering the world of finance. Now I actually have to say things that make sense. So that's new for me, but I'll try to walk you all through it. We all started here, I must say. I started here with 4 friends, and we were in the Entrepreneurship Master, and we were with like 100 people in the room, and they asked us, okay, who's going to be an entrepreneur when he's finished with studying? Like 95% of the fingers, so 95 fingers went up, and everybody wanted to be an entrepreneur. When they asked the same question at the end of the year, and okay, who is going to be an entrepreneur tomorrow? I mean, we finished our studies and we get started. Maybe 2 fingers went up, and it was for a web shop. Nothing wrong with a web shop, but it's not as innovative as we would have hoped. And once we dug into, okay, why do people start working for Rabobank or Unilever instead of being an entrepreneur, we figured that the #1 reason from our friends was the lack of money, basically. And we learned while we dug into it deeper and deeper, and we tried to come up with why people don't want to become an entrepreneur. In essence, the main reason people don't want to become an entrepreneur or not becoming entrepreneurs is money. We also learned that the #1 reason why companies fail is, again, money. And we learned more and more things about how entrepreneurship works and how it interacts with economic growth, and we learned that small firm birth rates, so the more companies starting in a country, actually leads to more economic growth. But money is holding a lot of people back to become an entrepreneur. What we also learned is that small firms are proven to be better at innovation and valorization. So they are better at creating new things, and they are better at transferring knowledge from the academic world into the economic world. Again, held back by money. We also see that in the more and more globalized world and the competitive market, it's really important for entrepreneurs to be able to act quickly when they see an opportunity. They cannot wait for years or months to come for money to get started. They need fast access to sufficient risk capital in order to capture a certain gap or market need. Once we started looking, okay, who are now financing entrepreneurship? Maybe you all know informal investors, or we talk about VC. Some people I hear talk, they just got a business plan and they talk about going to private equity. But what we learned is that they are by far not sufficient. It's not that they don't have the money, it's about the riskiness of opportunities in the startup phase. When we look at how does entrepreneurial finance work, is what you see is people go to friends and family, for instance, to get their first round of finance. But what we see is that it's really hard to get more than 30,000 euros from your friends and family. I mean, maybe you have a very rich uncle, but it's pretty difficult to get more than the 30K. And what we see is that informal investors, they're moving more and more away from the risky business. So they're looking for companies that are much more matured. If you don't have turnover, it's really hard to get finance from an angel investor. So what you see is the informal investors are moving more and more to the right. This is basically a risk line. The more you go to the left, the riskier the opportunity is. So in the very risky phase, you see that people really need to love you to back you up, basically. So those are your friends and family. But the angel investors, they don't care about you, they care about money, and they want to make money, of course. So they move more and more away. And what we see, there's a gap in the middle. And that gap is not being filled at this moment by anyone. And this gap is proven to be between the range of 50,000 to 350,000 euros. What we also know is that this gap, the need is around 1 billion a year. Again, in the range of 50,000 euro to 350,000. But what we know is that the current suppliers we see in this picture, so the informal investors, VCs, and friends and family, they supply around 75 million. So there's a huge gap to fill. And this 1 billion demand will increase threefold, fourfold in the upcoming years due to banking regulations. Another thing is, when we look at bank financing, right? When we think about entrepreneurship, financing companies, we think about the banks. But when we look at what is entrepreneurship, I mean, maybe you've heard about Schumpeter, one of the entrepreneurial academics, basically. He says an entrepreneur is a person who is willing and able to convert a new idea or invention into a successful innovation. And I was stunned by a report I read like just a few weeks ago. It's from the Economic Research Institute, and I translated from Dutch to English. It said, the unique risk profile of innovating companies makes them less attractive for banking credit. Hence, innovation entails uncertainty. That's funny, right? Companies we expect to fund entrepreneurship and to help companies grow actually do not fund entrepreneurship by their core, in their core essence, the innovation. So that's a big no-no. The banks will not finance young entrepreneurship, especially not young, innovative entrepreneurship. And we can see that here as well. We see a huge decline in entrepreneurial finance from banks, especially the red line is the 250K loans or below 250K. So there's a huge decline in that field. So if we look at current investments, who would consider himself an investor at this moment in the room? No one, right? So we're a room full of people, all business-minded. Most of you are business-minded. No one is an investor. I think this is mostly because this is the main reason why it's so hard to become an investor. The tickets are relatively large. If you want to become an investor and you don't have like 15 or 20K at least to spare or to invest, you don't get a seat at the table. Also, you need to come across good deals, right? I mean, it's really difficult to find an investment opportunity. So it's really inefficient at this moment because you probably wouldn't even know where to look or to start looking to get an investment or to invest in a company. The process is really an inefficient administrative process. Everybody's busy. You don't want to go to a notary. You don't want to sign thousands of contracts. You just want it to, if you want to invest, you want it to be quick and easy, right? And the reason why investors invest, that's probably would be the same for all of us, is because we like value creation, we like to invest, we like money to work for us, and it's fun. It's fun to be involved in entrepreneurship and new businesses. So that's what we learned. These are all lessons, right? We learned when we started digging into this process of investments. Also good to know that the Dutch at this moment hold over 330 billion euros of savings. It's just waiting there at the banks. We also know that stock market investors hold over 100 billion euros of capital on the stock market in direct shares or bonds. And they're losing money. For the last 10 years, they have lost money on their investments. What we also see, just some other general trends in the market, general market trends, is that we see a lot of disintermediation of many markets via the internet. I mean, when's the last time you ever bought a ticket at a traveling agency? You just go online. When you get an insurance on something, you do it online. So many industries have been disintermediated. The financial world is still pretty traditional by going to your bank, etc. The economic crisis is making funding less available for entrepreneurs. It's just an ongoing trend, nothing to do with anything else. It's just things we have seen. Heroification of entrepreneurship. When I was young, people want to become a fireman or a pilot or a soccer player. Now we see more and more kids wanting to be Steve Jobs, in his better days, of course, and Mark Zuckerberg. We see a rise of social media in the last few years. I mean, of course, you've all been on Facebook way longer than the average person. What we see is that since the last 5 years, actually the main population became connected via social media on LinkedIn and Facebook. And we see a social need for decentralization and do-it-yourself. It was really hard to coordinate do-it-yourself projects or whatever before, but I mean, we have the internet now, we have this social layer via Facebook and LinkedIn, so it's much easier to work together and create stuff. So if we have a wrap-up, we know that startups are very important for economic growth. The current financing options are insufficient for the startup domain. A large pool of untapped potential is available, and there are favorable general trends for doing things differently. Well, that's what we had when we were with these 4 guys sitting in a room thinking of how we could change the world. So we thought, okay, what if we could create a structure that would allow everyone to invest, fully online, no administrative process. Let you get in touch with deals, investment opportunities really easily, fully online, and you can compare them. You could actually contribute with the entrepreneur. So you see something you like, you can do more than just invest, but also share your network and share your expertise. And is a professional, realistic alternative for investors and entrepreneurs, and not just something where you put your picture online and you ask for money. It should be a real alternative. So did it work? I don't know, but this is what the Carlos Basti said. He said the Dutch did it again 400 years after creating the first stock market in the world. Well, I leave to you who those Dutchies were. So how does it work? I mean, probably you've seen crowdfunding. How does it work? You and many people can invest together in a company and you become partial owners. It's really simple, and that's the basic principle of what we've done. We've created a platform where a lot of people can invest in startup companies from as little as 20 euros and co-create businesses. That's what we wanted to do. Probably people who know crowdfunding have seen cases like this, right? So we see a Pebble watch on Kickstarter. They've raised over $10 million for this case. Is this an exception? Most likely, yes. This is like, of the 100 crowdfunding projects you'll see in the world, 99.9% will attract less than $10,000. Only a very few will be able to attract much more. What you will see much more is companies like this. This is a cheese factory, a Dutch brie maker. He needed to expand his processes, and he attracted 45,000 euros in 3 weeks from, as you can see, 102 investors. This will much more likely be what you will see from crowdfunding. Again, another one. This is touch over the internet. So you stick a USB stick with this thing attached on one side of the world, and another person on the other side of the world sticks it in his computer, and you can actually, when you touch it here, you can feel it over there. I mean, you can use it for many obvious things, but this was for military people and grandpa and grandma with their grandkids, so they could feel connected. You dirty minds. And why would you start investing? I mean, let's say you could invest from as little as 20 euros. Why would you invest in startup companies? Or why wouldn't you just go to Zalando and buy a new pair of shoes? Or you go to the movies, or you just spend it on beer. You could buy 10 beer as well for 20 euros. Well, just to walk you through it, if you would have invested 20 euros in one of these companies in the first round, what would it be? LinkedIn, 6,810 euros at this moment. Of course, it can move a little. I mean, every day is different, but it will be around these numbers. Microsoft, 20 euros then, will be almost $3,000 or euros in this case now. Twitter, 7,200. And Facebook. This is the pre-IPO Twitter valuation, by the way. So I didn't update it for that yet. I didn't compensate. Facebook, I did compensate for the IPO. Who dares to take a guess? Higher than 10? 20,000? One more guess? 50,000. 20 euros then would be almost $250,000 at this moment. So if you would have been Mark Zuckerberg's roommate and you would have invested that 20 euros, or let's make it 100 euros, you would be a millionaire right now. So that's good to know. And I mean, realize that those companies you see here are now exceptional companies. I understand that they're not your common company, but these companies once were also just an ID, right? So what we see is that thousands of people, newly created investors, just like you, who've never considered to be an investor, are now investing small amounts, worldwide, fully online, in over thousands of new startups. Just in the Netherlands, it has already created the situation that we have over the past year. an increase of 5 to 10% of total available venture capital for startups has been realized, and we just got started, right? So what do we think? Crowdfunding has only just begun, and has to be the potential to be a great engine for innovation, job creation, and economic growth. Thank you for your time.